Good morning, guys. It's a beautiful Tuesday morning. Today is May 26th, 2026, and this is what we are looking at yesterday. You can see we still haven't broken out of the consolidation. We, we entered this consolidation last week on Monday. Since Monday, this was last week on Monday, since 18th of May. We've been in this consolidation phase here. This was Monday, this was Tuesday. You can see the period separators. Monday, Tuesday, Wednesday, Thursday, Friday, then yesterday, Monday. So yesterday is what we were looking at. We were looking for potential buys above this level here. I remember saying if we get a good closure above this level and a candle breaks out of this range here, with some good bullish momentum, we could look for a retest of this level, take the market up. For the sales, this was we were looking for a potential sell below this level to close this gap here. See, the market opened with a very big gap yesterday morning, so we were looking for a sell below this level to close this gap here. So this candle had closed below our level. We were looking for a retest here and then rejection to take the market down. So once I saw this rejection, set up on the next candle. Once I saw this rejection, my sell limit was here, but with a very small lot size, because remember we were still trading within a consolidation here, and it's very dangerous to trade a market that is moving sideways. You see, there's a market moving sideways. The moment we break above this level here, the moment we break above 40 45.80, this level here, the moment we break above 45.89, the 45.89 level, 45.89.58, and 40 or break below 44.53.39, that's when we will break out of the consolidation here. So any trade within these levels, within this range here, from here to here, is a very risky trade. This is where money gets lost. So yesterday I did take a trade because of this gap here. I wanted to see this gap getting filled here. So I took my sell here, expecting the market to come fill this gap. But the market prayed, it was playing around here. Then, whoop, my stop loss was hit. So this was the fourth hit. The fourth time we are getting hit. Our stop loss is getting hit. This is the fourth time, and this one is because we took a trade within a dangerous region, a dangerous zone. Is a trading. This is a this is a consolidation zone. Yeah. So the best place you could be taking, we could be waiting for to take a trade is if the market breaks above here, or if the market breaks below here. Okay. So yeah, we were caught in this mess here. But what I was looking for is to fill this gap here, but we didn't. We got a loss. So that's our fourth loss. Have executed how many trades? 11 trades on gold this month. So we've won six. Well, one we got out at break even. So that makes seven. Then we've lost how many? Four. We've lost four trades, including this one, yesterday's trade. So that's the fourth time our stop loss is getting hit this month. And this was just because of great I wanted to see this gap getting filled here. Okay, so let's do our analysis for today. Let's see what you have today. Anything high impact on the USD today? There's no high impact news on the USD today. Nothing. Wednesday, nothing on the USD. Last thing. The only high impact news we have on the USD starts on Thursday. Is the core PCE price index and the prelim GDP quarter over quarter. And then Friday, what do we have? We only have high impact news on the USD on Wednesday this week. So yesterday it was a holiday for the on the USD. The New York market and the London market were closed yesterday. So today, let's see what we have today. Let's see what the latest development on Iran and US. So yesterday, US forces conducted self-defense strikes in southern Iran. So the war is still on. The war is still on. This was yesterday. The US conducted self-defense strikes in southern Iran. So the war is still on. So tread carefully. Wait for price to break either above this level or below this level here for the safe trades. For the risky trades, for people with high risk appetite, let me do an analysis for you, a quick one. We're going to remove everything here. Let's remove everything here. Start our top-down analysis on 1 month. Our monthly resistance up there. That is the monthly resistance. The monthly support is down here. This is a high. This is the highest point the market has. We've gone on gold. Is the lowest point. In how many months? 1, 2, 3, 4, 5. In the last 5 months, the lowest point gold has gone. So weekly nothing has changed. We still have the swing high here, the resistance, internal structure. We have this and this here. This is the external structure. This is the internal structure here. On the daily, what are we looking at? On the daily, you have this swing high here, and then we have this internal structure here that was created here on the daily. The swing low is still here. The swing low, swing high. The swing low is here. Then you have an internal resistance here. On 4 hours. On 4 hours is where we have this consolidation. So until you break out of this consolidation here, it would be safe to just sit on your hands. Just sit on your hands until you break out of this consolidation here. But for those with a high risk appetite, we can still go down. We can still take some quick execution trades in and out. So let's move this here. Now let's leave that there for now. Yeah, because this is the point I want to say the market break out of. To break out of this consolidation. Remember, we've been in this consolidation since Monday. This is where we got in Monday, Tuesday, Wednesday, Thursday, Friday, and then Monday yesterday. The market is not breaking out of above here or below here. So let's go down 4 hours. Let's go down to 1 hour. On 1 hour is what you're looking at. we have this, the market came, broke below this level here. Is with the swing high here. Have a swing high there, and then we have a swing low here. But remember, we have this internal structure here. There's this internal structure that was broken here. That is on the 1 hour. That's what we have on 1 hour. That's what we have on 1 hour. On 30 minutes. On 30 minutes, still the same. So this is what this is how you trade this market, but be very careful. Use the least lot size you can to avoid that is risk management. Use the least lot size you can, okay, to take this market, because remember we are still within this consolidation here. We're still within this we are playing within a consolidation range, a consolidating range here. So if you are looking to take a trade here, I would not advise you to go down to 15 minutes. But we have the same levels on 15 minutes. So on 30 minutes, this is where I'm going to leave my analysis. So on 30 minutes, that's a level that you could take a buy from, a potential buy. Potential buy above. But remember, this one is still risky because we're within the consolidation, okay? So if you don't have the risk appetite for it, just stay out, wait for the market to break above here or break below here, okay? So for the buys, you could take a buy above here, push it to this level at most, push it to that level here. For the sales, you would take a buy, push it to this level. For the sales, is I would take a sell potential sales below. For the sales, I would be looking to fill that gap all the way to this level here. So the first level I would be watching would be here. So the sales here. So for the buys, if you get a buy, you could hold it from this level here. If you get a good confirmation here, could hold this buy here from this level here to this level here. Stop loss, have a tight stop loss. Don't risk too much. Remember, you're still in a danger zone. It's a market that is moving sideways until you break above here. Then that's where the confidence to take a buy would be. You build more confidence to take a buy above this level here, confidence to take a sell below this level here. So this one is for anyone with a high risk appetite. Quick execution, in and out. Okay, so for the sales, Short position, take a market from here, uh, take it down, to this level here. Stop loss just about there. Remember, use the list, the list lot size you can, or just sit on your hands, wait for the market to confirm this break here. You could sit on your, you don't have to, remember I always say you don't have to take a trade every day. So these are the levels I'll be watching for the market to break below. I'll be watching for the market to break below that level there, or break above here. If you get that break above there or below there, these are the levels I'll be watching. Take the market to that level there. That level there. So the levels I'll be watching, you get a break above here. We get a break above here, wait for a retest of this level, then you could push the market up. If you get a break below this level here, wait for a retest of this level, and you could take the market to, you could take the market to this level here. There's this level here. So if you don't have a high risk appetite, then this trade is not for you. This trade within this level, within this consolidation phase, is not for you. It's for people with a high risk appetite and high risk management. High risk appetite, high risk management. So those are the trades you could take. So the levels I'm watching, a break above here or a break below this level here. Okay, so happy hunting, guys. Remember, trade what you see, not what you think. Risk management is always key. Okay, see you tomorrow for a recap of this. I'm out. Ciao.